There's a big day in the business world today. We've just been talking to Victor Dominello, the New South Wales Customer Services Minister, of course, about New South Wales opening up that international border. It all kicks in on November the 1st. It's shaken up the stock market today. Let's bring in Business Editor Ross Greenwood. Ross, there's some travel companies, airline companies can't wait to get started, right?
Oh, that's exactly right. And Qantas, obviously, first cab off the rank, as it were, or first plane out of the docks, because they have also brought forward their travel date for international travel to coincide with this New South Wales November 1 date that's been put on it. Now, clearly, there's been a difference of opinion about what you've seen out of New South Wales and what you've seen out of the Prime Minister, Scott Morrison, this afternoon. He's saying it'll be for returning citizens and all that type of thing. But the reality is that international travel is very close. So when you then go to the stock market, there's no surprise as to which stocks were really strong today. You can see here, Qantas up almost 2%, which wasn't so much. Regional Express, interestingly, the Rex airline up by almost 6%. But then the travel companies, which have been hammered in the last little while, they're starting to recover very, very quickly. Webjet up 4%, Flight Centre up 4% as well. So, you know, really from this point of view, they have been almost in Alcatraz, isolation for the last 18 months themselves. The likes of the Webjets, the Flight Centres, the corporate travels of this world. Now, perhaps with the reality of international travel returning and returning quickly, these stocks now are starting to find some supporters.
Yeah, it's great to see. Now, I was thinking about my purchasing in the near future, and I was thinking there's going to be some bargains on offer here because they want to encourage people to get out there and use it. But, of course, the oil price has gone through the roof just at the wrong time, hasn't it?
Oh, precisely. So the interesting part about this with the oil price is oil's going up, and while we've got, you know, zero emissions targets and all that type of stuff that the government's mulling over at the moment, the Nationals are mulling over at the moment, the one interesting part about this is the actual commodities that they want to get rid of, which is, you know, thermal coal and oil, are actually, you know, rising and rising rapidly. So if you look at, say, the price of liquefied natural gas, record prices right now. So a shipment of LNG, which a year or so ago might have been, you know, somewhere between $2 and $5 million per shipment, is now $200 million per shipment or more. And you've also got the price of coal, steaming coal, energy coal, also at record levels. So, you know, even this week we've been having a chat to a few people. One of them, Saul Kavanagh from Credit Suisse. He's their energy analyst. Just have a listen to what he has to say.
If you look across the commodity suite, we have coal up over 400% from lows last year. Oil's up over 500% from last year. We've seen LNG peak at over 2,500% increases on lows of last year. This is an unprecedented phenomenon.
Yeah, it's just extraordinary. As I was saying earlier, Ross, when you're talking about Glasgow, it's happening with this backdrop of an energy crisis in Europe, gas going through the roof because of demand as well, and as you mentioned, oil and coal. What about petrol prices? We're going to get hit in Australia for quite an extended period, presumably, with these oil prices flow through at the bowser.
Oh, there's no doubt. I mean, you can already see there that the petrol prices are going up, which adds to your cost of living,
and
which adds to inflation, which adds to potentially the pressure on interest rates. Remember, Singapore, its Reserve Bank or central bank raised interest rates. New Zealand did the same. United States, they're suggesting next year inflation there well above 5%. Here, our Reserve Bank says, nah, we're going to see through this. We think it's temporary. We're going to keep interest rates low until 2024. And yet we spoke to Iwan Sunito, who runs into the big property development company Crown Group. He says there's also a problem with labour. There's still shortages of skilled labour, adding to prices, adding to wages. Here's what his solution is, though. Have a listen.
I do believe that we need to be creative in terms of addressing these labour shortages or shortages of skillful people in our country. We can't just always rely on the migrants that are coming to the country. I see this untapped skillful workforce that are always dormant in the country so far. This is really tapping for people, mum and dad, that are choosing to work flexible hours. For instance, I see a lot of, for instance, on a mum that wants to be with it's a choice of life to want to be with their kids. They need to drop the kids, and the husband's got to pick up the kids in the afternoon. And if we can just work in flexible hours and really allowing this workforce to come back and work at, for instance, 6 to 2 o'clock. So one takes the kids to school, the other one drop them or work, and then they come back. And I think we can release a lot of significant workforce that are very, very skillful in the country. And I think that's probably where I felt we need to start thinking outside the box.
Chris, I just wonder how that'll go down with the masses. You know, split your shifts. You know, sort of one parent works 6 until 2, the other parent works and from midday until 8. You don't see each other except for your 4 weeks of holidays at the end of the when you've got the kids.
Save a lot of marriages, you reckon? I tell you what, I reckon this flexibility. I think some people overstate it because a lot of people want to get back to the office. A lot of companies want to do that, but the flexibility that's been proven how we can work from home, that's going to be a benefit in the medium to long term, isn't it?
There's no doubt, because what companies have learned is that they can trust their employees and that they don't lose productivity just because somebody puts on a load of washing or puts on the dinner or picks up the kids. I think that's what's been learned out of the lockdowns.
Great stuff. Thanks, Ross. Always good to talk to you. Catch up with Ross Greenwood with Business Weekend on Sky News here, of course, 11 o'clock on Sunday.